Hey everyone, let's look at the chapter on businesses and cost of production. Let's start with the concept of economic costs that includes explicit and implicit cost of production and accounting costs, which includes only explicit cost of production. Economic cost, the definition is the payment that must be made to obtain and retain the services of a resource. Explicit costs are the monetary outlays, or we can say the out-of-pocket costs, as for example, rent, wages, office supplies. Now, implicit costs are something which we do not really pay directly, but we are feeling indirectly. As for example, this is the opportunity cost of using self-owned resources. This includes foregone interest, rent, wages, and entrepreneurial income, which is also called normal profit. The economic cost numbers are always greater than the accounting cost numbers because economic includes explicit and implicit both, but accounting cost includes only the explicit cost of production. Now, regardless of size or structure, each firm's motive is profit maximization. By accounting profit, we mean the total revenue, which is defined as price times quantity. From that, we subtract the explicit cost of production. And economic profit is the total revenue, again the price times quantity. From that we subtract the explicit cost and the implicit cost of production. So for accounting profits, we are taking off the accounting cost from total revenue, and when we calculate economic profit, we are taking off economic cost from total revenue. When we do the calculation here, the economic profit numbers will be less than the accounting profit number. Alright, here it just trying to show everything in this using these nice boxes. We are looking at economic profit and we are looking at accounting profit. Now I'm going to look at an example here. It says calculating implicit cost, explicit cost, economic and accounting profit. And the source is from Open Economic Resources. Let's look at the following example. It says Fred currently works for a corporate law firm. He is considering opening his own legal practice where he expects to earn $200,000 per year once he establishes himself. So this 200,000, this is the total revenue. Now to run his own office, he would need an office and a law clerk, or basically to run his own firm. So all of this should be included as explicit cost, and I'm just going to write E in front of for explicit cost. He has found the perfect office which rents for $50,000 per year. He could hire a law clerk for $35,000 per year. If these figures are accurate, would Fred's legal practice be profitable? Now, let's calculate the cost. What's gonna be the explicit cost of starting this own farm? This includes the office rental, which is $50,000. This one, that means these are basically the out-of-pocket costs. So these are the out-of-pocket costs. Now we have the law clerk's salary, that is $35,000. So the total explicit cost is $85,000. So this explicit cost is also called the accounting cost. Okay. Now the total revenue is $200,000. From that we take the explicit cost off, and this $115,000, this is the accounting profit. Now let's say what else is going on here. It says to open his own practice, Fred would have to quit his current job where he is earning an annual salary of $125,000. So this is foregone wages. This is a part of foregone wages. Now I have to calculate the economic profit. This economic profit is total revenue. From that I take off this explicit cost and implicit cost of production. And this 85,000 and 125,000 together, let me just write it down here. So this 85,000, this is explicit. Then we have $125,000. This one's implicit. These two together are my economic costs of production. Now if you do the math here, this is 210,000. As you can see here, this economic cost number is greater than the accounting cost number. The next thing I'm going to do here is calculate the economic profit. So from the total revenue I take off the economic cost. Looks like I have an economic profit of negative 10,000 per year. This I can compare with the accounting profit. My accounting profit is positive, but my economic profit is negative. So basically, if I look at this from the economist's point of view, Fred would be losing $10,000 per year. So it doesn't really make sense to open his own business. All right, that's all for now with the concept of explicit cost, implicit cost, economic profit, and accounting profit.